Okay, so let me get started. The topic today is top AI and data trends in fintech, right, for 2021. And this is a very interesting topic that I've been thinking about for a while, right? And I love to get deep into it. And I think, obviously, I'm going to talk more about fintech because that's the area that I work in. But I think a lot of it is actually applicable across different areas. So happy to dig in more during the Q&A session. But let's go through it quickly. I want to share a little bit about the company that I work for and my personal background. So I work for Camino Financial. It's basically a next generation, a data-driven fintech platform, and we specifically focus on providing loans and lending solutions and financial services to the Latino space in the US. Okay. Myself, I've been working in technology for over 20 years. My background has always been in tech, and computer is sort of my thing. Early in my career, I worked in Fortune 500 companies. So I worked for a lot of big name companies, and they manages a ton of multi-million dollar systems. More recently in my career, I've been sort of working in startups. I help fundraise, manage teams, mostly in engineering capacity. But obviously, for this company right now, I'm very, very much in the trenches with data as well. And so, my experience sort of kind of, spread across fintech, data, digital media, ag tech, and security as well. I'm a graduate of UCLA, and I went to Columbia University for my undergrad. So that's kind of my background in a nutshell. Before I start kind of going through the trends, I'd like to take a moment just to allow us to sink in and think about what happened this year, all right? So 2020 has been a very, very tough year for not just fintechs, but I think in a lot of business sectors in general, right? And we know, hands down, like coronavirus was the leading problem of it, right? Back in February, this coronavirus took off in the US. We had the first coronavirus related death reported in February, right? And at Camino Financial at that time, we were having this debate, should we stay open or should we actually close our physical offices and work from home, right? There was a lot of debate and going back and forth. And before you know it, all employees was like coming up with excuses to work from home. So one of our executives, members of the team said, hey, we better monitor this thing closely because our reputation and credibility is at stake, and we don't want to fall on the wrong side of the history here. So we then, right there and there, we decided to, move to remote working and the next day, and that was kind of like around March this year, and then one by one, the states went into lockdown, and of course we're glad that we had the VPN. Thank God for VPN that we could work from home, and so. But things continue to happen, right? Black Lives Matters took place in the summer. There was a lot of looting and then people protesting, right? And then this year we had the worst natural disasters, in the US. The giant fires that we had was the largest ever in California. And there's all kinds of things going on, right? And then on top of that, of course, you have a political climate that is very, very turbulent as well, right? With the elections coming up, a few weeks away. And I want to encourage everybody to go out to vote. If you haven't, please do so. But anyways, let's move on. So what does all this, mean at the end of the day? I think from a data perspective, you can think about it as, the consumer behavior is actually changing radically. And how radical is it? Let me illustrate with this story. So I have a neighbor. His name's Max. He's like a second grader kid. He would come over and play soccer with us. And we were still kind of playing soccer a little bit, even after COVID happened with the masks and social distancing and everything. And then after a while, the kids stop showing up at my house. And I was like curious what happened. So I went to knock on this door and there was nobody there, right? So I started asking everybody in my neighborhood, okay, what happened to that family? They're not there. And then one of my neighbor came and told me, oh, Max, you know what? He's too cool for school. His parents, took him and moved to Caribbean. All right. So that's how radical things are. Like people are either moving away from the life they were leading before COVID, or they're just kind of staying at home and not going anywhere. Right. So people are just buying different type of things. Remember back in March, April, people were hoarding toilet papers, right? People love cleaning products and they still do, right? And maybe think about it, probably you're buying stuff online or your groceries, or making just one stop at Costco instead of making 4 or 5 different stops to limit your exposure. So totally changed, right? And this is on the personal side. What about on the business side? Well, a lot of physical stores, they're not able to survive. So this is the data that I took from Yelp. So more than 41% of shops in the US have permanently closed. I think the number is probably higher now, because right now is October. And so there's a ton of changes, right, that's going on. But at the end of the day, what does that mean for data scientists and data professional? Well, if you ever worked in one of these companies, right, that focuses on building models, right, trying to predict certain behaviors, you can take that model and put it in the trash can for now, because a lot of things right now are totally different. They're not the same as they used to be, right? So we need to have a better way of going about it, because there are all these different things coming on board. And one of the trends that I've seen so far this year that I think that will continue to go on in the coming year as well is, there is a rise in data volume. So right now, this is the latest statistics that I have. Everybody is generating about 2 megabytes of data per second, right? So by the end of this talk, you're gonna see gigabytes of data, and because this is streaming video, so maybe tens or hundreds of gigabytes in total, right, per person, and you have a lot of this data going on, and they are now being made available as well, right, as by companies or business, because they need to collaborate, right, with each other. So you can see a lot of these API enablers that are out there, right? They allow business to kind of work together, passing on information to one another to, to actually make more profit, or to actually improve certain conversion rate of certain funnels, right? And this is just the digital stuff. What about the analog data? Well, there are some vendors out there that specialize in taking analog data, stuff that's on paper or maybe in PDF, and converting that into JSON so that you can feed that back into your data models. So overall, there is a rise of data volume availability, all over the place, right? So that's the kind of the first trend. And with that, what you're gonna see is, with the rise data, you're gonna need more tools, right, to manage all that. So I've kind of categorized the tools in 3 buckets. So data security, just now the previous speaker, Samuel Berger, he touched on this topic in depth, and I totally agree. I think there's definitely gonna be a need for this. You know why? The stats that I have is there's been more cyber attacks in the first half of 2020 than all of 2019, okay? And that's unprecedented numbers that we're seeing. So what are you gonna do? You're gonna, see some of these tools that are interesting, right? And I think Samuel earlier alluded to some of these tools that are great. And I think a lot of them are good for fighting or preventing against external attacks. But what about internal attacks? What if you have an employee that went rogue, right? Because you couldn't give him a raise due to COVID-19 or whatever, right? So you have vendors like Darktrace that, builds an AI model that monitors all the user behaviors on your network. So whenever there's any anomaly, right, the flags will go off, right? Sysadmin will get alerted, and then you can start shutting down accounts. So that's what definitely on the rise, right? And then a lot of these tools, right? I have some of that logos here, Segment, Snowflake, which is a cloud-based data warehouse. All these tools, they're just going to the cloud altogether. In the past, you may have seen companies big and small, going to data centers, right? Building out their data warehouse, hosting their servers. That's all in the past. Like you, in order to move quickly in changing times, you got to be cloud based, and everything has to be moving at light speed, right? So Segment, for instance, just recently got acquired by Twilio for about close to $3 billion. That's with a B, right? And that's a ton of money for a company that focuses just on customer data platform, right? And last but not least, you got data privacy issues that everybody is concerned about. You got all this data everywhere, right? But where are the tools that will protect consumers and that helps, right, businesses like fintech companies that manage all this data, accordingly to the law, right? So you will see a rise of these vendors. They're gonna play a big role in the ecosystem. So those are the tools. Now let's talk about applications a little bit. I want to start off with this story of mine. So I remember back in the day when I was a kid, my mom took me to this postal bank, and I remember like you know, the moment that I went in and brought my piggy bank, and deposit my money in the bank account, and the teller, writing that amount in a little passbook with the signature and the stamp. Well, that was, back in the 80s. The millennials today, they ain't got time for that. They want beautiful streamlined experience, almost Amazon-like, right? So you go in, you have all this predictive personalization, to your age, to your profile. So the stuff that comes up are the products that you will like right away, right? Doesn't matter if it's financial product or commercial product, whatever it is, it's all heavily personalized to your needs, right? And there's stuff like Echo, right? Voice communication tools that are built on top of AI and ML modules. Right now you can use it to buy stuff on Amazon and tell it to turn your lights on and off, but there's nothing stopping it from making financial transactions, right? You can say, hey, go and move my money from my savings to checkings and pay my bills to the gardener, right? So there is all these changes that are coming, which I think it's exciting and it's futuristic. All right, so that's the first of these applications that I thought would be interesting. And then the second is, fraud detection, right? With so many, phishing scams out there, frauds. This year we had, obviously a lot of people trying to, defraud PPP and all these other initiatives that's helping businesses. And even our own company, like we've seen, a lot of fraud applications that were coming in. So the most effective way to sift through all that transaction, right, is obviously, with a machine learning model, right, and then with decent behavior monitoring, you can raise the flag sooner, rather than later when the damage is done, right. And the third thing is modeling, right? I think even though the stuff that we have built before, the models are not as relevant anymore. You're supposed to be building new models too, right? To accommodate the new normal, right? So I think there's going to be strong applications continuing, in the credit and insurance tech space, right? You may start seeing like these very personalized credit terms or insurance terms. They're just tailored to your lifestyle, right? If you're low risk, you pay lower premium, right? And things like online customer churn, that's always been there before. I think there's going to be more off-the-shelf sort of solution that you can tap into and get a sense of, okay, what the churn's going to look like, because data is all available, right? And improve P&L, what does that mean, right? A lot of fintech companies or companies in general, right now, they got to be more lean and mean. You know why? Because business is tough, it's the new normal, right? Your consumers are not behaving, normally anymore. So if you can improve your conversion rate just by 1%, with the right machine learning model or AI, then maybe you can break even or even make some profit, right? There's great application here. And then that collection, of course, with millions of Americans that has lost their job, you're going to see people, behind on their payments, right? So in the past, of course, you have people on the phone talking to the people that are behind, but that's a very slow and efficient way, right, of, getting debt, properly paid. And so the good thing is, the machine learning and AI tools out there is mature enough, to start doing things like validating, people's promise to pay if they really mean it, So that's one sort of trend that I thought would be very important to cover here as well. And another thing is, this explainable AI for credit approval. I think, people have been talking about it for a while. I think you're going to be seeing more of this, especially in the fintech space. In the past, yes, giving credit, you can go through the rule-based method, which, I think it's okay during normal times, but in tough times, you got to be very creative, with your models, right? You need to be able to get the extra edge so that you can improve the conversion rate. And so you can give an answer to a credit application, but don't just give an output. You have to give reason, right? Hey, I denied this case because his revenue was below a certain threshold, right? So you need to be able to build some AI model that can actually do that, very succinctly, so that you are, operating your business according to the legal boundaries of of the business. So those are the main trends. And here's one more that I thought would be interesting. I think Jason sort of alluded to this a little bit. I think he said something like, there are these niche players that are not able to survive. It's true. If your niche is very small, your fintech business probably is not going to survive. However, Camino Financial has been very smart about this. We focus on the Latino space in the United States. There is a lot of unbanked individuals in the world, okay? In the US as well, right? I have a number here, 1.7 billion for around the world. And in the US, the Latinos together, they generate about 2.3 trillion dollars in GDP. That's trillion with the T, a huge amount, right? If the Latinos in the US were in the country by itself, it's going to be the 8th largest in the world. So this is a big niche, a giant niche, right? And in the past, people say, hey, data for this space is not available because they're not bankable. There's no paper trail, no digital footprint, whatever, right? But that's not true anymore, right? Data for this group is now becoming available. In the last 5-10 years, a ton of data vendors, have been working to scoop up data from different places. And even more so, you can build, approximations model to some of these things, using surrogate, models, right? That you can predict maybe expenses or income or what have you, right? To make your model more accurate, even for unbanked individuals. So this is another very interesting that I thought I would share. Now you may ask, okay, thanks Cho-nan for sharing all these wonderful tips and trends, but how do you put it together? There's just so many things that you could focus on and expand your business, right? So thankfully in 2019, we started thinking about this problem. We wanted a framework that can help us, scale our business even during tough times or fast changing times. So we gave the name of this framework Luna. So what is Luna anyways, right? Well, Luna is also the name of this ancient pyramid, right? That's in Mexico. It's called the Pyramid of the Moon in English. And there is something very, very mystical about this pyramid. till today, nobody has any idea about how the pyramid was built, okay? Given the technology they had in those days, right? And there are people citing experiences when they climb this pyramid. The closer they get to the top, the more spiritual energy they feel, right? And so, similar to Luna, like Camino Financial is building a proprietary, tech stack that can be more insightful, right? And definitely more proprietary and defensible when you get closer to the top, right? And we have summarized everything here that I love to share with you. This is probably the most critical slide of the entire presentation, but it's very applicable, right? To different sector. Although we wrote this with fintech and Latino economy in mind, but at the end of the day, Luna is the AI-driven business intelligence pyramid, right? At the very bottom, right, that is the foundation of everything. You have cloud-based infrastructures, third-party software, the best in class. Don't build that from scratch. You buy for that. You pay for that. For instance, AWS, right? Amazon Web Services, Google Cloud, Azure. These are all good tools. Just pick one, right? And then integrate. And that's where you kind of start building, layering on, your next most critical piece, which is the data lake, right? Is in essence, it could be a data lake or data warehouse. And this is where you put in like, your customer data, your business data, all the stuff that you maybe have bought from outside third-party vendors, JSON, XML, what have you, and any sort of performance data related to your business. You can all stuff it in there, right? And that data will then help you, build that model, right? Whether it's machine learning model, an AI model, you take from that data lake and then you start kind of iterating through those models very, very quickly, right? To do what? To improve your targeting, your customer retention, to improve your profit and loss, right? To contain risk. There's a lot of stuff that you can do. That model will help you with decision making. And then on top of that models layer, right? You want to layer on, the API endpoints. With the API endpoints, you can then share that data, right, with your partner, with your customer, with maybe your potential, clients, right? Certain insights that would be helpful and that would be able to enable their businesses. So that's, and then at the end, the top of the pyramid, you will basically be able to come up with insights, to your business, no matter what you do, right? And that insight is going to be very dispensable, right? You can propel your company to the next level very easily. And so the idea with these pyramid structures, there are layers in there, they're modular. So there's stuff that you feel is no longer applicable. You can obviously switch them out, right? The modules are interchangeable. The goal is you want to use the best in class tech infrastructure. But as you kind of get towards the top, that stuff gets very proprietary. You got to have really good data scientists, data engineers, data analysts, right, to put that stuff together so that, it will continue to derive insights to help you navigate, difficult times ahead. Well, that's sort of the meat of the presentation. In summary, I would like to, share a quote with everybody here. So this quote came from W. Edward Demings. He is a famous statistician and mathematician and professor in the 1900s. He said, "In God we trust, all others bring data." So what does that mean in the context of 2021? Well, I think we should continue to stay very optimistic, right, about AI and ML and how that would benefit us, right? Sure, there are things that would be out of our control, and we have to live with that. But I think data should and still is the best lens through which we can understand as a human species how we can navigate and survive and thrive under new normal. That's the end of my presentation. Thank you so much for listening. I'm happy to answer questions if there's anybody who have questions and still around.
Can you check the Q&A window? We do have one question there.
Okay, let me take a quick look.
Maybe I can pick up the question for you. So the question is,
when you say, I've got a question here, why you mentioned that lending side is bad, you mean auto loan and housing? Yeah, so the lending side has been very, very rough because you know, we have seen obviously a rise in default rate and delinquency rate from the borrowers, right? And so that's been happening, you know, across, you know, different lending categories. Doesn't matter what's auto or mortgage or business lending. I mean, in one way or another, you know, businesses, you know, or individuals are they're just having tough time paying back because you know they lost their job or you know the circumstances have changed in their life, right? So what you have seen is you know portfolios that are just kind of going down the drain. You know, portfolio is a big thing in the lending space. If your portfolio is rubbish, you don't have a business. You know, fintech just kind of goes away in lending, and that's why you know I mentioned that you know lending has been very challenging year. But I want to say that happy to report you know Communal Financial is you know growing and coming back. You know, we're definitely in the recovery phase. We're not totally out of the woods yet, but we're doing a good job of sort of rescheduling some of these loan payments so that people can get some breathing room and they can pay some back as they are recovering their business as well. Cool. I got another question. The lending club has high default rate. Is it higher than traditional bank? Well, I don't have that number in front of me, but what I can share with you is lending club and traditional bank, they operate very, very differently. And my guess is that, you know, probably lending club, you know, is not doing so well because they are the ones that's been very, very adventurous, right? Innovative with their lending program. Banks, on the other hand, they're so conservative, right? They even have trouble, you know, hiring the right people that can help them, you know, build their tech so that they can capture the value, you know, of people that are more open to bank online or borrow online. So, you know, so Lending Club, I know, you know, they recently actually acquired a bank, you know, so they are coming in with this challenger bank model, and they have sort of stopped their traditional lending because they used to do a lot of peer-to-peer lending. So they kind of, I think, in the face of moving away from that. So it's really interesting. You can see that these two are sort of colliding. You know, you have banks that want to work with fintechs, and then you have fintechs that are buying up banks so that you know they can operate, you know, with a single pool of capital to help them move faster, and also to mitigate risks. Hopefully that answers the question. All right, next question. Why do you think machine learning model better than traditional model in lending industry? Do you see any proof? Well, I want to be completely transparent. There has been companies that are on different camps. You know, there are companies that are totally 100% on AI and machine learning when it comes to lending, and there are companies on the other side that are doing more of a rule-based approach, right? We at Camino Financial were sort of in the middle, but more leaning to the rule base. That's kind of what we started with. But now we're leveraging machine learning model because what we found that after 4 or 5 years doing lending, there's only so much that you can do with rule base. They're just things that you know you're not going to be able to catch with rules, right? But with machine learning, you could do a much better job. But of course, you got to go through the exercise of picking out the right features, right? So that you know they're relevant in your model. So at the end, we're finding that you know we actually have a model in place, and we're sort of right now doing this thing where we are running these two models in parallel, right? So that we can see and compare which one is doing better. You know, we needed to be, you know, in some ways responsible, right, with this way of rolling out these models, so that it doesn't endanger the portfolio. So we're very excited. We know based on statistics and some data analysis that we've done earlier, if we do the machine learning model, we can improve a lot of things, conversion rate, default rate, and whatnot. So we really can't, wait for that to happen when we switch over completely. And I think a lot of companies, lending companies out there, are aware of this as well. Alrighty, so the next question is SoFi ready to go IPO? You know what? I wish I knew the answer to that question. I would definitely put my money on that. What's interesting is there's been a slew of fintech companies that have gotten either a lot of capital through VCs, or they've gotten capital by sort of thinking of doing the IPO route. Obviously, SoFi, they have been really good in building this community around their product, right? And they've done a good job, but obviously not without hiccups. There were bumps on the road, and I'm sure through COVID, they have their their bumps as well. Are they ready to go IPO? I think the landing IPO space is still very, very difficult. I think a lot of investors out there are looking out for return on investment, not so much on potential growth. I think landing itself is no longer exciting as it used to be. Maybe 3, 4, 5 years ago, maybe SoFi could go. Maybe at some point SoFi was on IPO track, but they've kind of deviated from it. But in any case, right now, I think unless you're like very, very innovative, in your approach and your branding and your product offering, it's hard for you to go IPO, at least in the US. But look at Asia, right? You got Ant Financial that's going IPO fairly soon. It's probably weeks or months away. Ant Financial is huge, and I think the valuation is like 200 billion or something like that. And but they capture a big percentage of the market, in China, and they have not just one product. They have like 5 or 6 fintech products all in kind of one place. So yeah, I think at the end of the day, it really depends on how you position your company, and how you present those strategic advantage to your investors before they can go IPO. Hopefully that answers your question.
Okay, so this is Jason. First of all, thank you to be our speaker. I'm glad you mentioned the features. I believe the feature selection is more important than the model selection. Mm-hmm. That's the key.
Absolutely.
But in the finance sector, even though we know some features, they are indicators, but we cannot use them, right?
Yeah.
Because the rules.
Correct.
The financial, the government, the financial departments, a lot of things. How can you handle that? So you guys trying to somehow invent the new features or collect more data? How you can handle this challenge?
Exactly. So, with the let's talk about regulation a little bit. I think finance space has been one of those spaces that's been very tightly monitored and controlled by the government because of the financial crisis that we had a few years earlier, right? So in essence, you can't really use some of those prohibitive features. You just kind of have to stay away. But that's not to say you're limited by it. There are in our sort of analysis, we found features. They're good predictors of somebody's ability to pay down the road, right? And of course, I can't get too much into it because it then becomes proprietary. That's the top of a pyramid. That's our insight. But what I'm saying is, there are these approximations that you could do, right, to figure out if this person is going to be credit worthy down the road. And so that means collecting, a lot of different data, right? The ones that are not sensitive, right? The one that will not help you discriminate for sure, right? But the ones that are, cool by the regulators. So that means you gotta have to iterate through. You're gonna have to see, okay, what makes a lot of sense. And I want to say, like, in a lot of countries where the financial regulations are not as strict, right? They have obviously used some of those more sensitive features like gender. Like in lending you can't use gender, right? But in other countries, it's whatever, like it's so obvious and you can use that. But the thing is, what's missing in some of those developing countries is that they don't necessarily have a credit bureau, right? So they don't have credit information about this person, so they can't even use it. So what they've done is, in some of these third-party developing countries, they're looking at telephone bills, right? Electricity bills, whatever bills, right? Or even the friends they have on their phone, right? Just to get a sense, okay, is this guy legit, right? And even things I've heard, even things like, how often do you call your parents, to see if this person is trustworthy? And so there are a lot of ways, to go about this thing. And I think in order to do it properly in the US, first of all, as a fintech company, you got to watch the regulations. You have to know what you're allowed to do and what you're not allowed, and then start experimenting, right, with data. Because like I said, there's a surge in data volume, all kinds of data coming in, right? You got to just do your analysis, pick the right one, and then build your model.
Thank you for your comments. I would like to go back to a previous question from the attendee about the machine learning and the traditional statistic model. As I know, 5 years or 4 years ago, at Wall Street, a lot of banking, trading company, they didn't trust, machine learning, deep learning, all this type of thing. They thought it's kind of black box. But recently, things changed. As I know, some of the company, Capital One, Wells Fargo, Chase, Bank of American, American Express, Discover, especially Capital One, Discover, they started to use machine learning in, risk management. What do you think make this happen?
That's a really interesting question. I think 4 or 5 years ago, there was a lot of hype. There was a lot of hype around AI, machine learning. I remember 4 or 5 years ago, like there were these robo-advisory fintech companies, tech startups that advise people how to invest. Those were huge, but nobody knew like exactly how they would perform portfolio-wise. Now, the thing with fintech companies, whenever you're doing a financial product, you need to give it time, right? So that you can observe, performance and see how things do trend, right, at the end of the day. And so I think what some of these big, banks or Wall Street firms are seeing, that actually they do work, at the end of the day, they do work, right? So the thing is, you have to be comfortable with it. You need to get in with the people that knows these things, right, in and out. And so that, you can get your low-hanging fruit. And another thing that I've seen is also that, some of these tools that are used for building machine learning models or AI models, they're more and more prevalent. There's just more companies doing it, right? And so even if you are an investment firm or a bank that didn't really have, the right professionals or data professionals in-house, it wouldn't be hard for you to hire a company that could access these tools, right? That, that help you, right, start these models up and evaluate against existing models. And, at the end of the day, when people observe, okay, there's a difference, they're going to start, looking into why and how. And as I mentioned in one of the slides earlier, AI explainability is one of the trend now. Like, you can't just build an AI model and not explain what's going on behind the scene. First of all, it doesn't comply with the law. And second of all, people have questions, right? Is there actually more risk involved, right? So I think there's going to be more effort in building, AI solutions that would be able to explain, right? So then people are more accepting in that sense.
Thank you for your comments. I think we are so successful for the whole conference. So many speakers. We run for 4 whole days: Friday, Saturday, Sunday, and Monday. And the last talk is really wonderful. It's great talk about fintech. Thank you, Cho-nan. Thank you.
Thank you, Jason, for organizing this wonderful event. I hope to be here every year. Doesn't matter it's online or in person. I would love to come every year.
Definitely next year we will go to Los Angeles Convention Center again. Online is good, but we would like to meet the person in person. Meet the young professionals, entrepreneur, in person. I really would like to talk with people. Thank you all. Thank you for all the attendees. It won't be easy to work on Friday, Monday, and also the weekend. And also a special thank you to Jiharvi. Thank you to work with me Friday and Monday.
It's my pleasure, Jason.
Cool.